What is up, everybody? Got some Meowjiwana right here. Tarukin, you want to get high? Come here. You want to get high? He's so aggressive. He has a very bad addiction. Much like you guys when it comes to gambling. So in this video, we're going to talk about trading value areas on profiles, or more so advanced auction market theory. Today I'm going to show you where I traded a value area high 3 different times and scalped it, and why I scalped it. This is, god damn it, my hand. Here, have a little. You son of a bitch. Look at him. Fucker's on tilt. He's such a friendly cat, but when he's fueled up on drugs, he'll bite the fuck out of me. He'll bite me. Jesus Christ. Sprinkle some little nippers on him. There we go. You guys can enjoy the show in the background. So while Tarukin's in the background, you know, getting schlossed on some catnip, you're not going to be able to see him, but he'll come in and out of scene. So we'll have Tarukin cam and see how that goes going forth as the channel grows. So what we're going to do is we're going to look at the trade. And what I did was I shorted this region 3 different times. We're going to actually look at those trades. And I'm going to explain what happened, why that happened, why it went short. And we're going to get more in-depth into auction market theory. So on this channel, I like to have these really deep philosophical discussions about trading. A lot of auction market theory stuff out there I think is very elementary. This is going to be like your grad school of auction market theory because it's so much more nuanced than buying and selling value area highs. If that's all people ever talk about, then I don't think they really know what they're talking about. And what happens when that shit don't fucking work? Because it doesn't work. Actually, I really recommend this video right here because I really get in depth about auction market theory, how auction processes are ranges, and the problems with value areas, which we're going to talk about here. And I don't usually trade developing value areas, but today I did. So why did I do that? You'll see. So again, I recommend that video. Go watch it before this one. This will be great on building on it. So what we have here is a very good looking bell curve. I've said this in the past and I'll say it again. The better the bell curve looks, typically the better the price action will be when it reacts in certain areas on it. Now the VIX is very fucking low in the 12s. And with a low VIX, you tend to get a lot more chopping, and the price action gets a little more randomized in my opinion, and it's not getting good value area rotations aren't, it's a lot fucking harder. Okay. Most of my trading is scalping for a tick or two. However, every now and then these types of trades do show up. So what we have here is a 4-day profile. You can see below me, back here is 1 day, 2 days, 3 days. This is Sunday night. I don't really count it. And then 4 days. So again, I'm going to be shorting this area several times. And if you notice something here, it actually doesn't go to value area low. So if we copy and adjust this purple line here, this is the value area. And I'm going to put value area low so it's labeled for you guys. I'm going to put value area high right here so you guys get it. Now there's a problem with developing value areas. There's a problem with profiles that are being made. And the problem is these fucking value areas, as each bar goes on, the profile builds. You can see the profile growing. Well, the value area fucking shifts with it. So as you can see, the value area shifted up slightly right here. So what a lot of novice traders will do is they'll make the mistake of re-engaging that value area high to short it, and a lot of traders attempt to trade from one value zone to the other. So a lot of people try to go from the pink line to the pink line below and hold it all the way across. Yeah, I mean, that doesn't work a lot of the times. In my opinion, you should be scalping, and when we look at these trades, I'll explain why you should be scalping. I have a video why you should be scalping in 2024, and I made that video at the beginning of the fucking year, and we're halfway through the year, and I still think you should be fucking scalping. And I think Tarukin done fucking passed out from his bender. So what I like about this cat is I see he's a nice kitty. He just bit me in the beginning because he was fueled up on drugs. Hopefully YouTube didn't hear that and demonetizes me. Going back to this, a lot of traders attempt to trade from one side to the other. Well, you can see where I shorted in this right up here. We're going to see it. It never fucking goes to the other side. We end up closing the session and it starts hitting up higher. Like it goes higher. It pushes past the value area. Notice how I trade it here. And I traded in this region like 3 different times. And I scalp in this little chunk. It doesn't look like much, but trust me, it's quite a bit. And then it doesn't go all the way across, and then it pushes up higher. And not only does it push up higher, because I can get in roughly at 68, 50-ish, 69, or I'm sorry, 69, 50, somewhere in there. We'll see. But it pushes 22 ticks. That's huge. That right there is a lot of risk. It may not look like a lot of risk, but 22 ticks going against you is quite a bit. Sure, it comes back down after this wick, but it never truly goes across. The problem is when you're trying to trade these value areas, I like to be conservative. Like I want to take out near this point of control, or if the momentum, especially if the VIX is low like it is, I want to take it out, the trade off when the momentum's running. I don't want to go all the way across. I want to be conservative and take the fucking trade off at that midpoint, that point of control. Because there's a good chance it might not go across. I've been fucked by so many trades coming back on top of me. You guys are getting fucked by that too. You know how I fucking know? Because I'm told that all the time. There's a trader in my Discord who trades just these value areas, and 3 days in a row last week he got fucked, and he's like, Fat Cat's right, you should be scalping. And he trades these. This is what he likes to specialize in, and he's getting fucked. I personally don't really trade value areas like this on developing value areas, meaning the profile is still developing. Because that fucking value area moves all the time. Sometimes you can have a perfect curve right here, and the market just starts trending up right in this region. The market just starts trending up in this region like this, and it just keeps fucking going. And what happens is this curve starts to get bigger and bigger, and the fucking value area high keeps going up, and it keeps going up. And then you keep fading it, but it's not going down. And then before you know it, you keep getting fucked. See, this is what people don't talk about in auction market theory. I mean, look at it. Look at from, the market opened up at what, 8 something down here, right? Notice the value area near the low, where the blue is, right above my head. Notice how it moves down, and then as the price goes, it moves up again, right? And then right here, after where I would have traded it, the value area moves up, right? Sure, it doesn't move by much in this specific example, but there are days where it moves a lot, and you keep fading the fucking thing because you think it's going to mean revert, and you keep getting fucked because it never goes down. It never goes across. It doesn't go to the midpoint. So when it comes to trading value areas, what people don't never tell you is the problem of trading a fucking value area. Now, there's another type of value area that people trade. People can either trade the developing value area, and that is, you know, and again, value area is going to be like 70% of the total volume of the range or whatever. It's this blue area. This is where most of the price action has chopped. Again, it's just a fucking range, and if you watch that video I recommended, you would know that. So here's another really good looking bell curve, prior value area. So this one's done developing. Okay, so we can, some auction market theory people like to trade prior value areas. They like to trade curves that are already established. The value area is not going to move. What could go wrong? Well, we'll delete this one. Sometimes it doesn't work out very well. I mean, like, fuck me. Look at right here. It literally rolls a tick from target, and then it just blows out the bottom fucking end. It starts to bang into it. It rips up through it. This is actually a good pullback, and then it goes almost all the way up before just shitting on its fucking self. So this prior value area works pretty good. Now, a lot of auction market theorist people will trade this to the short side in this specific example because most of the chopping is below the prior value area. So therefore, they're going to want to short it here. The price is accepted below it. So it makes sense to go short. And then it comes in here and it doesn't stay in here for very long before it goes all the way across and rolls, by the way, by a tick before it dumps really hard, and it would have blown you fucking out if you were holding it exactly to a tick. I mean, this is what the ES does. It fucks you. That's a 37 tick move against this area. I have a saying, close enough, good enough. If it's close enough to the target, it's good enough. I'm getting the fuck out of it, okay? But what you fail to realize in this specific example, what you fail to realize what's happening here is this. There's a whole nother fucking range here. Now, it doesn't look like a good curve, but there's another range here, and the price is starting to wedge up, okay? And I talk about it in that video I recommended, this one that I keep telling you guys to go watch that you're probably not going to watch. You're going to watch this first, but whatever. In that video, I talk about how when ranges break out, they tend, developing ranges, current ranges, when they break out, they tend to put in a measured move. And the measured move of this would be roughly the body width, so 128 ticks up. So, you know, yeah, somewhere's right here, 130 ticks, close enough, good enough. And then it rips up and keeps going. So understanding the current price action is very imperative to trading prior ranges. I mean, there's also, I mean, this isn't the best of examples, but let's go find another prior range. So here's another one. I guarantee if I draw a bell curve, a curve here, it'll be almost perfect. Oh, fuck, it's pretty almost perfect. So here's another prior value area. The better the range, the better the bell curve. That's just how it is. Bell curves are ranges. So you have one here. All right. Notice this specific example. It actually bounces off of it. Okay. Oh, my cats are fighting each other over the drugs. It bounces right here, right? And then kind of goes nowhere. And then it dumps in and it starts bouncing here multiple times, never going across. And then it schlits it at some fucking point, okay? So, you know, how do you know if it's going to go through or not? Sometimes it gets pretty fucking bad. There's a lot of times where you don't see them just rotating this clean, okay? There's a lot of times where it's like this. You have a prior value area, then it comes in, and then it starts just chopping the fuck out of it. And then it keeps chopping the fuck out of it. And then it keeps chopping the fuck out of it. What do you do in that specific fucking example? Well, it's the current range is what matters. So if you're trading a prior value area, it's important to understand the current developing value area, the current range, because current price action is going to dictate whether or not these fucking things are going to come through. I mean, it's in my opinion that these lines are just kind of, they're not that fucking great. Okay? They don't rotate cleanly. Yes, in these last two examples, it rotates pretty clean. But what about the next 10 times this happens and it doesn't? All right? Because that definitely happens. And what you have going on up here is the current price action. And as you can see, it's sort of pretty icky looking. This is multiple days, by the way. So at this point, I would say there's probably a good range. At this point in time, you can start to see it developing over time. Notice how this range is comprised of smaller ranges, right? I have a video. If I figure out what it is, it's on range expanding. I hope the fuck I know what it is. It's somewhere in the YouTube library. I would go watch that video because we're going to talk about range expanding here. So what's happening in this region is the profile is just putting in all these smaller ranges. Like there's a really nice bell curve here. You know, it kind of wicks into it. And then this is also a prior value area. I mean, you can look at it like this. And then the price is stuck between two of them. This one here and this one here. And then it finally goes all the way through. You know, which one's it going to fucking go through? This is where you can get in the trouble with these fucking things, right? This is where you can get in trouble. Oh, it pulls back here. I'll go short. But then it bounces off this one. It already bounced off of it. I think it might go through, but then it comes back and it bounces again. Fuck. Then it bounces again. You know what I mean? Like, then it chops the fuck out of this region. This chop doesn't look like a big deal, but this is a 30-second chart, and when it's churning for, you know, 24 fucking minutes, almost 30 minutes right here on the edge. Oh, this is a 3-minute chart. My bad. When it's churning here for almost a half hour, you're going to be like, what the fuck? You know what I mean? On the hard right edge. Sure, hindsight looks great and all. But really, the correlations are going to help you determine whether you should go through or not. But these fucking lines, sometimes they're like VWAP. When I did the VWAP video right here, sometimes it pivots, sometimes it doesn't. That's how these value areas are. Sometimes they pivot, sometimes they don't. Okay? Sometimes they pivot a million fucking times, sometimes they chop like shit. And it continuously chops like shit. And it never goes through one of these prior value areas. It'll go halfway through it 5 fucking times over, and it never goes through it, and then you're getting fucked. Okay? So, the problem with a developing value area is when a developing value area has its value areas, as that continues to go on, those value areas are moving. And if it's trending against you or it's chopping on that value area, it's moving on you, you can't really lean on it. Okay? And the problem with a prior value area is the current price action right now is going to dictate whether we're going to go through that or not. And so are the correlations. I think a prior value area, while I do trade them, are just like VWAP in the sense or any other indicator, and sometimes it'll go through, sometimes it won't. What I like to see is like overly tested prior value areas. I like to see them just absolutely abused, because then the expected value is really high and there's a really good chance it'll go through. But also, I really want to see that the stock market, you know, the Mag 7 are correlated and are supporting that we're going to go through there, because correlations are more important than anything. And as these markets start to sync up, they desync, and then they sync up, and then they desync. So this is why a lot of times the price will go into a prior value area, fail and come back up, and then go into it and fail and come back up, and go into it and fail and come back up, because you're getting some sinking in the stocks, and then they desync, and then some of them start blowing up in their own auction process, and then ES can't fully commit and go down, so it rolls back up. So the correlations really are going to dictate whether we go through these fucking things or not. But in the end, those lines kind of really don't matter. I might want to get in a little earlier, a little bit later. Never like strictly on that line up until today. So I don't want to get in on that line. I want to try to get in when I know I can get a free tick. I want to try to get in when I know I can get a good scalp. It's guaranteed momentum, so that can be a little bit above, below. If it's too high above, I don't want to commit and hold through that zone, because then I'm way too early. Like, I'm anticipating a trade that's, several points away. I want to be pretty close to that line. If it's too close to target, it's probably too late, unless everything kind of moves and it's like, all right, there might be a little bit left here, then I might get in late if the stocks, it's just so nuanced. And when we look at today's trade examples, you'll see, because there ain't going to be anything like this. I'm probably never going to take a trade exactly like this ever again. 3 times in a row is pretty insane. So they're always so nuanced. But it's just really dependent, and the current price action is dictating whether we go through or not. And a lot of people who are trading in the prior value areas that are already established, where the value area high and low can't move, they may start ignoring the current price action, and they get so hung up on that specific line. Oh, we're chopping below it a little bit. So if we're chopping below it, we're accepting in the prior value, so therefore it should go through. No, I seen it accept inside these fucking things. And if you don't know what exception is, or acceptance, or whatever, that would be, say, like, we come down here and then the price starts just chopping in here for a while. It's accepting. It's accepting. Most of the price action is under this line. It really doesn't fucking matter. There can be times where it'll just like churn above it, and it's not fully accepting in, and then it just goes through. I mean, it really doesn't matter, because the correlations, because they're all desyncing and syncing up and desyncing and syncing up, they're going to be what determines if the price is actually going to push through. And expected value changes so drastically that as things are unfolding, things just change quickly. And a lot of trades I'm going for are just small. Most of the time, I'm grinding out just a tick because the VIX is so low. If VIX gets higher again in the 15s or what have you, you're going to see me picking up points, 2 points more often. But it's just so low right now that the market just turns on you, and then it walks away and it never comes back. Like, it grinds away and it never comes back. And then you take a 20 tick loss, you're not getting that back, because it's so choppy in the way it's taking reclaims and shit back. And if you're familiar with reclaims and slips, you need to go watch this. And again, this video that I've recommended, because I tie a lot of it together in that video. This specific video ties even more of it together, because I don't think I'll ever actually make a legit course. If you want to know more, you need to go to this link right here. I do have my coffee narrations. I talk about more advanced shit there, something called stroking and de-stroking. I made a presentation on it. My presentation on why order flow doesn't matter is in there as well. I mean, there's like 200 hours of narrations, over 1,000 trades. The link in the description doesn't work. Sometimes it works, sometimes it doesn't. So type this into your browser manually if it's not working. So what is it in for you? Somebody asked me, what's in this? What am I going to get out of this? Well, it's me narrating my trading like this. There's a lot of these good presentations like this one that I'm sharing with you that are buried in those narration videos that nobody ever sees but a couple of guys, a couple of subscribers. It's not for everybody. If you're able to go through my content and you really like my content and you can actually pay attention and focus, it's going to be probably more for you. But also what you have to realize is this is a high skill ceiling job. It's still going to take you years watching my content. You need to watch hundreds of hours of me trading for it to really start to click, because a lot of these things are nuanced. And also, it's really hard for me to say everything I'm thinking on the hard right edge, because I am talking through the hard right edge. But I can't tell you every little thing I'm thinking. It's just, there's no way. So it's just like this, constantly watching it over and over. It's like going to a jiu-jitsu class. You're not going to be a world-class fucking fighter, after a couple hours. You need to be sinking in hundreds of hours of shit, of going to classes and training and sparring and fighting and going up through your belt rankings and all that. It's no different with trying to learn what I fucking do. You gotta really commit and put in the time. And not everybody's a good student. Not everybody's willing to sit there. A lot of people think this might be some quick fix to their trading problems. It is not. But what you get out of this, what you're going to get out of this is being able to understand price action on the hard right edge, how to read it like words in a book, how to understand it to where the price action isn't as random as you think. Now, whether you can turn that into edge or not depends on you, because your psychology might be fucked up. You got to work on that. I can't press the button for you. You might be too impulsive. You might be FOMO. There are a few guys who have gotten a lot better with my content, but these are guys who've been with me for almost a year, 6 months. And heavily watching the material and reverse engineering it. All the trades are timestamped, so you don't have to watch these really long videos, but it's a lot. So you can go through just the trades. The trades are timestamped 30 seconds before the trade, so you get to see and hear a little bit of what I'm saying before the trade. So if you just want to see the trades, you can do that. But a lot of people are saying, hey, your link doesn't work. I don't know why it works for some and some it doesn't. Manually put this in. There's a lot of little lectures in there. It's this channel on steroids with me basically trading almost every fucking day and talking through it on the hard right edge, because I think it's important to understand what I'm thinking on the hard right edge, other than hindsight like this video, because when we break this down, I'm going to break it down with a level of confidence. However, when I'm in the trade, there is a level of uncertainty. And if you want to watch the full sessions, because you're going to see the full P&L, I forget what I did, like $5,000 today, which is really good, because Wednesday, Thursday, I was down. I do a review video on Thursday showing how I was up and down I was down that entire session, how bad I was struggling. And it's very rare that I lose 2 days in a row. So I break down why I was down, so you get to see the losing trades, and I explain to you how I fuck up, because I fuck up and kind of do shit that I shouldn't be doing in my own trading. But also you get to see gems like today. But you also get to see how most of it is a grind. Okay, because most of it is just grinding little trades. That is what's most of it. You get to see what it's like. The thing about trading is, I think it's like sports. The difference is, like, you can go watch hockey and you can watch the game. The difference with trading is, there's a hockey game going on, but you never actually get to see the players playing it. That's what's fucked up about trading, is you just never get to see the players playing hockey, right? You hear about it, you see a little bit about it, but you get to watch me play the game pretty much every fucking day. And talking through it or what have you. So that's what the coffee is. And for me, when I was new, watching somebody else just do it for 2 weeks. That was John Grady at the time. It helped me substantially. Did I get edge immediately after that? No, I didn't. So, I mean, that's the reality of it. It's going to allow you just to have a more clear understanding of what the fuck is going on and how to leverage that shit. You have to build upon it, and you have to do the work, and you have to pay attention, and you have to focus. You have to be a good student. So with that being said, so now circling back, a lot of the trades I'm doing is grinding very small trades, bigger picture ideas, yeah, you know, or intermediate picture ideas, just larger picture ideas, but scalp it. Don't try to push it to target most of the time, because most of the time it fucking comes back. When you get into these things, just because it's an A+ entry doesn't mean it maintains an A+ status. So what you'll see is it'll be good at first, but then something's happening where it just starts failing and coming back. Again, that's because of the equities. And just looking at the auction process and equities and just putting it together and making sure I get a majority agreement, because that they move futures. Okay? They fucking do. Because futures is just an index of what those are. And again, in my order flow video on the coffee, the shit ain't natural in futures. Now, in the VWAP video, I do say order flow is useless, and it's useless in the sense of being able to read it to predict if there's going to be a move or not, because it just comes in so suddenly. There's no build up in it or none of that bullshit. It is useful, and it's useful in unique, weird ways. And we're going to talk about how it's useful today. So one thing you have to understand, going back to this, you know, 4-day, 3-minute chart, 4-day range. The thing is, when we start ranging, and it's very evident a range for 4 days. When we start to range somewhere for multiple days, and it's a pretty clean looking range, it's not like overly extended with a fuckload of reclaim, which this does have reclaiming here and then it takes it back, but it's not a bunch of reclaims stacked on top of each other and below. And a lot of it is getting filled in. After we range for several days and it's really a solid range, what almost always happens is larger than average limit orders come in. Now, there is real order flow, natural order flow in futures. However, I think it's spreadier than we think. So I think there's areas, and I show it in that one video I recommended. This one, there's like a screenshot in there of a DOM with natural order flow versus unnatural. I think a lot of prices are going to be generated like computer algo market making generated shit where most of it is not real. They're going to leave some in because they have to. They're obligated to. But every so many ticks above or below are the real orders. More natural orders, if you will. And when we start to range sideways for multiple days, and it's evidently a range, and this is a relatively tight range. This isn't a very big range. You're talking 82 ticks. It's not some 300 tick behemoth or some shit. It's tight, roughly. I know 82 ticks is a lot of ticks. But what you start to see is you start to see these large limit buys and large limit sells, and you're going to see them. You're just going to see the DOM is a little thicker. You're going to start to see larger limit orders, larger bids and offers. And you're going to see them just kind of all day long. Like the order book or the depth of market gets thicker, it gets fatter. And it typically does that. I mean, it could do it for other reasons. But on these days where it's ranging like this for multiple days, they're typically doing that above or below that point of control or in that value area. That's not a hard rule. They could be doing it on the edges too, but they're doing it on both sides, and then you start to get this up and down sweeping where the market really is trying to hit these limits. So I can tell you my theory on why this is happening, because I've looked at a DOM for almost 8 years at this point, and just this product. So at this point, I have a pretty good understanding of what the fuck is going on. And if I was to be leveraging large blocks of orders, this is what I would do. So what I think is going on is, at this point, larger traders, institutions, whatever, knows that we are in fair value. What is fair value? Fair value is just going to be the point of control. It's fair value. It's a good price, right? Right in this fucking region at 66.50. That's a great fucking price for 4 days of chopping. It's one of the best prices. You know, down here, it's better to buy. Up here, it's better to sell. You know, it's just a little bit better of a deal. But it's fair price in the middle, okay? So what's happening is you're seeing these limits come in after several days of ranging, and they're larger than average limits. And I've seen this happen so many fucking times. And I've noticed this phenomenon, and it took me a long time to figure it out before I actually started to leverage it. I mean, hell, it's very rare that I've actually leveraged it. I mean, today's a great example of me leveraging the fuck out of this phenomenon. So what I think's going on is these larger participants, because the DOM changes, and that's what's good about the order flow, is just seeing it be different, seeing it be really thin or a lot thicker. Because that's going to tell you, hey, there's something going on here, and the price action's going to react a little differently. I might need to manage my shit different. Also, seeing the order flow, if it's going to fill you in the queue, or if it's struggling to fill your position, you should cancel. Or if your target isn't getting filled on the exit, you might want to market order out instead of trying to get that extra tick if you use a lot of limits like I do. That's where order flow is great, to know that type of information. But as far as just being able to read it and go, hey, there's more buyers coming in, it's gonna go. No, that's not how it works. You got to think everybody can see fucking order flow, so there's really no edge in that. And a lot of times shit is getting canceled and it's moving all at the same time across multiple markets. But what I think, you know, it's fair value. It's evidently fair value, because like this fucking 4 days of ranging, and then this happens a lot where just bigger limits start to come in near the middle. We're kind of in that value area. And a lot of times, that's when you really start to get mean reversion plays, to where you can actually lean on value area high or low. And again, at the time of taking my shorts, right in this region, the bell curve is pretty fucking good. That's a pretty perfect looking bell curve for like 4 days of trading up until this point. The cleaner it is, the more round it looks, the better the price action is typically. There's going to be problems. Like I said, it could just compress right here and keep going. That's why I'm going to be conservative and short it in this region and not try to ride it all the way across, because most of the time it's not going to go all the way across. And my scalps, the 3 scalps I take, and they're pretty big scalps, those moves will pretty much have added up to not quite the full length of that, but a nice chunk of it. Maybe up to the point of control or a little bit below it. So we'll look at it. Going back to seeing a lot of these larger buyers and sellers. Again, it happens when there's multiple days of just ranging. If it's a bigger, whippier range and it's not really tight like this one is, it's not as good. You're going to get more random shit. But again, we got a formula here. We got a good-looking bell curve, a pretty good-looking range, and we got those limits going on where they're larger than normal limits, just pumping up everywhere. And when I see that, typically the market starts to mean revert it. Not all the time, but in this circumstance, I've seen it so much that I just know it. I've seen this happen like, fuck if I know. Hundreds and hundreds of times. This is why experience is so important, because there's no way you're going to nail something like this. Because a lot of people that follow my work and try to model my trading, they don't know about this, and then I just do it today 3 times in the same area. And this is just kind of one of those outliers that you guys aren't really going to, if you're trying to model me, this is a trade that you're really not going to be doing, but it's good to see it, to know it, so that way when it continues to happen, you can start to get a feel for it and potentially leverage it yourself. Now, another thing's going on here. So again, good looking range, good looking curve, good. And then the limits, that's a sign. Another thing that happens here is we go from an extreme low. This is an extreme low down here of the range to an extreme high. And it goes up almost pretty, I mean, it dumps here. This is still an extreme high. Dumps and then extreme high again. That right there, you know, going from one extreme to the other extreme, it's because of this reclaim here. You can see the market shit itself for whatever fucking reason. What was that, Friday? I didn't trade Friday. Something happened where the market shit itself. And like I said in the reclaim slip video, they're going to take it back. And they take it back, and then they put in a reclaim here, take that reclaim back, take that. And this chop walks up, and then they puke it. So they're putting in another reclaim. So this whole middle part is what I call slipping. Slipping is just a reclaim on top of another reclaim. And when you have slipping, where it keeps reclaiming in roughly the same area, that's typically a sign there's going to be a range there, and that's exactly what the fuck happens. And then the market just sort of, yeah, it drifts low in Sunday. But on the open, it starts to take all this mid-slip back. So if we take this bell curve and actually pull it back up into this point, I would say up until where this big wick is, there's a range right here. Perfect bell curve, too, by the way. So right here. And notice how they just puke it, and then they puke through it again. So hypothetically, once a prior value area gets traded, you get rid of it, it's no good. But what's happening here is when it does this, it's just range expanding. It's building on top of what was already there. Sure, you could trade that prior value area, but the thing is, prior value areas tend to get built upon. All of this shit is fractal. It's an auction within an auction. Again, you need to go watch this. Because it's an auction in an auction. It's a micro range, a micro bell curve, a micro auction is feeding into these things. And then it starts to expand into a bigger bell curve. And those bigger bell curves expand into even larger bell curves at times. And before you know it, you're in a range for a month. And when it goes from one side to the other of this monthly range, it seems like it's the end of the world because it went 200 ticks in a day or some shit and it just went straight up. And it's like, no, it's just in a fucking range. See it on Twitter all the time. People don't understand what the fuck is happening. Okay? So this thing rips and it the way it pukes across this prior range and then it pukes it back up. This V shape right here, this initial V shape, I mean, that right there is a sign that it's going to want to just continue to build sideways. So it's like, it could have puked on top or below and kept running away from it, but it puked kind of through the middle of it. So it's like you had one auction process in the middle. They blew it out, but they blew it out in such a way that they blew it back in and then they just start trading back in it again. So it never could just get away from it and just break out and run. Yeah, it trades back through it, that could be a setup or whatever, but it never truly breaks out of this first range and keeps going in either direction. It fails both sides, here and here. And due to this reclaiming effect, they're going to fill it in. What auction market theorists don't understand is the reclaim slip effect. Reclaims and slips are going to dictate the auction process. It's going to dictate the price wants, it's a vacuum, and the price wants to mush into that. And since it wants to mush into that area, the fucking, it's going to start to build a range there. It's going to start to build another bell curve there. And we can go from here over. I mean, it's pretty nasty right there, but as it pans out, you know, it starts to build a bell curve again. So we saw a bell curve back here, and then you see one here. Personally, for me, I would lump it all together because it looks like a good range. It's staying in this relative area, right? And that's the problem with value areas is we could all draw these things slightly different. So those areas are going to always be in a slightly different area. So whose is right and whose is wrong? Really, nobody's, because sometimes they work, sometimes they don't. But there's a lot of context to why I did what I did. And I've already explained it. So they're just, it couldn't go either fucking way. So they're just going to rebuild this fucking value zone. Really, this prior price action still fucking matters because it really never blew out hard enough that there's still probably positions in here that didn't stop run on higher time frames. Because the longer a range goes on for days and days, the more intense the breakout's going to be. Since this is a 4-day range, it's probably going to break out a measured move, but since it's 4 days of ranging, it might overshoot. So you're looking at about a 73 tick move above or below the value area. It's probably going to go more. It's probably going to go 100 ticks. Am I going to be able to get into that and hold it? Probably not, because I don't want to take a 20 tick, 40 tick pullback, because then that just fucks me in the end of it. But if I was risking like a 2-lot, yeah, I might. But it makes no sense for me to size down to hold for a bigger trade when I can just keep it sized up and scalp and get what that, you know, just the scalp will add up to the move in the end. So now we start to get a perfect bell curve, and we already put in our 2 extremes, and it's kind of drift fucking around. And then right up in here, this is where I'm like, dude, this makes sense for a short. But also, what are equities doing? So let's go ahead and look at that actual footage. All right, guys, so this is about 30 seconds before I get into it for the first time. So NVIDIA did stock split. For some reason on this chart, it looks like shit. These are 3-minute charts. Alphabetical order: Apple, Amazon, Google, Meta, Microsoft, NVIDIA. I don't look at Tesla. So kind of looking at the higher time frames on these 3-minute charts, there's really not much going for them. There seems to be a V flush on Apple, actually. You can see Apple started tanking pretty bad in this region, and it's starting to V back up. And it kind of blew a range in this. It's not a very good looking range. But for me, it's ripping up. There's a good chance they may take that V back, because there's times where they take the V back. Meta looks fucked up for some reason with this huge wick. But Apple has something going on. The rest of this structure doesn't really, kind of looks like shit, at least on this time frame. So I'm taking a look at these things. Here's ES right here. This is on the hard right edge, 1250. This is what. So I'm looking at this thing. So notice this, as it rips up, what is it leaving in? So I'm going to draw the value line. So notice this. It's leaving a reclaim in. So when I get into this, I have a reclaim that's actually helping me out. So this is another sort of contextual thing that's building a case. It's almost like you're a detective and you're trying to solve a fucking murder. Here are the pieces of evidence I have to take a short. 4-day range. It goes goof nuts right here. They rearrange it, making it a 4-day range. You got these weird large limits coming in. I've seen that before. And the bell curve's pretty perfect. Now, yes, it's overshooting a little bit, but I do have some reclaim below me that can assist the trade. If it walked up, different story. But we have some reclaim here. Continue to watch this. Kind of fast forward it. So we just go for it. Now, unfortunately, I don't see what the stocks are doing. 70.50. This is the first go at it. And it's dumping, and it's dumping pretty hard on a low VIX, by the way. A lot of these low VIX trades, it's really hard to get a tick, but in this specific circumstance, we're getting it. Now, you're not seeing the large limits. I know you're looking for them. They start to come in and out. Now, this says NVIDIA, Microsoft, Amazon. This is ES. So she's kind of going down. I want to hold this to the point of control, which is 64.50. But since it is a low VIX, 64.50 is the fuck off my screen right here. That's a big move for such a low VIX. Okay, so this is actually, that was actually what you saw there was NVIDIA, Microsoft, and Amazon. When you see the three different charts, and this is how my coffee is evolving. I'm actually actively switching screens as I trade. So I'm like editing on the fly, if you will. And now I'm labeling the charts so that way you guys can understand, like, oh, what one is that again? So the coffee is evolving to be a little more user-friendly, if you will. So this is actually NVIDIA, Microsoft, and Amazon on a 3-second. So Amazon's got a bit of a reclaim here. Now, they don't always immediately take these reclaims back. NVIDIA's kind of compressed up. But what's happening is something where ES is tumbling quickly. And for whatever reason, ES, since this NVIDIA stock split, has really been wanting to work with NVIDIA. So there'll be times where NVIDIA rips up and ES rips up with it. And there'll be times where it rips up and ES doesn't even move. Then there's times where the slightest down move in NVIDIA, ES tumbles with it, and then NVIDIA rips up and then ES doesn't move with it. And then it goes down again and then ES moves with it on the down again. So it's stroking with it. So for every downstroke, ES wants to move with the downstroke of NVIDIA, whereas on the upstrokes, it kind of gets stuck and it just starts reloading, absorbing, or whatever. So I want to... Is ES going up with NVIDIA in this specific circumstance, or is it going down with it? And those that stroking and de-stroking will shift. There's a video on it on my coffee. I might do it on YouTube at some point. It's just, these YouTube videos are so much more rare. And there's just other shit going on in my life. I might actually be on another YouTuber's channel. I might actually be in something else is going on. If it happens, I'll tell you guys about it. It has nothing to do with this fucking industry. It's pretty exciting for me. But anyways, this stroking, de-stroking shit, I want to know, is ES tumbling down with the ES down moves, and is it getting stuck? Sometimes it'll go both ways, and that's telling me there's a slip there, so I can kind of play these little scalps. I know this is like over the top, but again, this is like grad school type of lecturing. And you got to watch it multiple times to really let it sink in. But all the auction market theory shit, people always ask me, where should I go to study this shit? My stuff. Because everything out there is so basic and it's all the same shit regurgitated. And then you get fucked and you don't realize why you're getting fucked because you don't know how to read the price action because these auction theorists don't know how to fucking read price action. Anyways, so ES is kind of tumbling with these little micro downstrokes on the video. You do have a bigger reclaim here on Microsoft, but it's kind of up on this range. Again, 3-second charts. There's ES right there. Tumbling really fast. So it's starting to get stuck there and you see a lot of reloading. So I'm like, this is a pretty good fucking trade in this region. I'm just going to take it off. You know, we're going to take it off for what? Seven ticks. So, you know, 7 ticks right there. So 7 ticks may not seem like a lot for you, but in this type of VIX, it is quite a bit. And there's a good chance it's going to come back to this value area because a lot of the times you're trying to trade something like a VWAP band or a value area or a point of control. It really doesn't matter, especially in this lower volatility environment, lower VIX. A lot of the setup could be on, right? The setup could work, but most of the time, the first time it's testing it, it's probably going to test it multiple times. And this is how a lot of newer traders get shaken out of trades because they're getting over-tested. They're getting over-abused. I wish he was more active. Be more active. So, I mean, he just sleeps a lot. Let me know how that's working out. But anyways, a lot of newer traders, they tend to go for it. But a lot of times it overtests your entry and it comes back before it finally works out. And it can come back multiple times. So typically the first several tests are just worth scalping because it's probably going to come back and then you can get in again. Not always. It really depends on correlations and other circumstances and context, but I know in this specific example, it can probably come back, which we'll look at trade 2. So it is coming back. It doesn't go all the way to 64, 50, or 75, whatever the point of control is at. So we're about to take another go at it. So again, this is the 3-minute chart. So this time we go in at 69.50. So let's actually go back a little bit because I did fast forward it. Again, this is coming from the coffee, by the way. And I'm actually talking in this. So what we can see right here is NVIDIA has a big reclaim here, and it's chop walking up. I guess what you guys would call a channel or a wedge. Well, they stop run it, so they're stop running it here. You can see that. So since NVIDIA is stop running down, and yes, the last attempt I took tumbled down relatively quickly because it did for such a low VIX, I still believe NVIDIA and ES are sort of sunk up. But what happens here is they sort of desync and they're not really sunk up and you're not getting that tumble effect. So NVIDIA puked and ES ain't moving. So I'm waiting. This is a bigger view of NVIDIA. Or wait, that might be, nope, I'm sorry, that was not NVIDIA. That was that Apple and Google? Yeah, that's Meta. This is Google. This is Apple. So Apple, remember Apple's making that big V. If I move, you can see that giant V. It's starting to tumble back in. So Apple's looking good. So I'm really looking at Apple a lot in this one. It's starting to chop. I'm looking for Apple to take some of this reclaim back. I don't like Google uptrending or Meta per se, but Apple had dumped so fucking hard. Now, the trade's turning against me. Now, what happened is you can barely see this. NVIDIA popped up real hard. But ES didn't move. So, ES ain't really moving with the upstroke or the downstroke of NVIDIA. So, I'm willing to kind of hang out. I still believe it might go to POC here. I'm, again, trying to see if NVIDIA can, and this is ES right here. I'm trying to see if NVIDIA can puke it. Played on 2x speed just because. So I'm just kind of looking at this range and just sort of explaining what's going on, which I've already explained this shit to you. You can see this large offer coming in. You see the large bid here, by the way. A lot of this shit is popping up all over the place. So that's sort of the sign. The sign was a little bit earlier in the session. You can see more of them popping up, larger bids here. Again, it's just hovering against me. A lot of big orders coming in. It starts to dump. Just kind of keep fast forwarding it. So NVIDIA is kind of like chop walking down. It's starting to channel lower. So when it pukes hard, ES doesn't really move to the downside, which isn't super good. Really looking at a lot of this hold doesn't look very promising. But because of things like these large bids you can see down here and all that, and the fact that it is a pretty perfect bell curve and it never pulled mid, I'm willing to gamble on it because that's what we do for a living. We gamble. And the EV on these 3-second charts are always drastically shifting. So while they don't look good at this moment in time, they can drastically shift. So NVIDIA pukes right here. You can barely see it, but NVIDIA pukes really hard. ES goes with it. So ES is starting to restroke with NVIDIA's downstrokes. Now there's a big reclaim here or a V shape. If NVIDIA is starting to hit it, and then ES isn't quite following through. Now the problem is you got a lot of chop walking up on Amazon and Microsoft. This is all resistance or support. There's no real reason for either of these to puke, and I'm banking on them stop running, which isn't good. You don't want to really lean into that shit. And if this trade was anything else, I would have already been out of it. If it wasn't where it was on ES at the value area high. You know, you can see NVIDIA started puking again. Can it take all of that back? You're starting to get Microsoft the break. I need Amazon to start puking, but it's still channeling up, which isn't good. That's why this isn't just dumping. Because of Amazon don't look good, and there's Apple, by the way. So there's that Apple range, and it's starting to chop here. So in my opinion, Apple, there might be a chance Apple actually pivots and rolls, which it doesn't, but that's what I'm kind of seeing it. Apple, this is a value area here somewhat. There's like a bell curve here. Apple is doing that value area low, which is what this red line roughly is, pullback, and it could continue down. Because this fucking giant V. Now, it could shove up and keep going. Looking at the other stocks, they don't look all that magical. NVIDIA just channeling lower. Amazon just not giving it up for me. It's looks like it's starting to slip in the middle where it's all reclaiming in the middle. And at this point, NVIDIA has this reclaim down, but it's starting to get stuck here. This is ES right here. ES has really stout resistance at the exact same price. You can barely see it, but it pivoted here twice. And then I believe I mark out what price that is. It's like 68s or some shit, I go, it's probably going to puke here because it rotated the same tick exactly. NVIDIA's starting to chop walk down or channel down. Amazon doesn't look all that good because at this point, see, this stuff is changing so much. Is this going to be a new range? If so, then it could just mean revert back up. Same thing going on here. This is such a good reclaim that they may not take it right away. So NVIDIA is probably going to blow out this, starting to blow out that channel. So I do believe I get out of it. I don't remember exactly how many ticks I get out of it or if I show the exit. Still channeling low. But now it's really not taking this reclaim down. It looks like it could just jam the fuck up again. Hopefully I show it. So we do exit out of it because it starts to compress back up here. And I'm like, all right, at this point, it looks like NVIDIA is going to just blow out this channel. And sure as the fuck shit, the market, I don't remember if it continues to sink lower or not. But yeah, it does start to sink a little bit lower. But I get the fuck out of it. We make, on this specific deal, we make about 900, I think. We'll take a look. So 1050 there and then 900 right there, which I know, I mean, again, that it's size, that's why the number is so good. But if we look at a calculator, you know, that's 6 ticks. So one of them, we got a 7-tick win and a 6-tick win. You know, that's 13 ticks. That may not be impressive for you guys, but the thing is, when you start to really hold for some big bullshit that you guys are always trying to do, it don't work out for you. It's just easier to scalp, I'm telling you. But 13 ticks, you don't need much to make a living at this, let me tell you. So let's look at the third trade. It never really went to VPOC on ES, but here's where things are starting to get a little interesting here. Look at NVIDIA. So we do remember, you guys remember NVIDIA in this region. But look at it in this section. It's starting to range really hard, but it's slipping the mid-range. So it's very violent in the middle. And that to me is a good sign. It seems like they may take this reclaim back here and they may start puking lower. Amazon's kind of at the top of a range, but then again, in the bigger range, it's mid. Either way, because of what NVIDIA is doing, I'm like, fuck, I'm going to go for this again. And I believe I see Apple actually puked up at the time, and Apple hits its value area high and it's starting to collapse in pretty drastically. So Apple actually popped up. And this is part of why we didn't get to the point of control yet. So if we look at Apple, this is the region I was looking at it to fucking dump here, but it didn't. It ended up ripping up to value area high, and this is part of why ES isn't going down. This is part of why it's not hitting the point of control the first 2 times I went for it. It puked up, but I start to see it collapsing. And this collapsing, there's, you know, a two-legged reclaim here and a reclaim here. That's a two-leg reclaim. And it's starting to collapse in. So at this point, they're almost just V-flushing and taking this old reclaim back. So between that and Apple, I'm like, okay, this actually looks decent. So we're going to go for it right here. Because NVIDIA, when NVIDIA rips up, ES isn't ripping up with it. ES is wanting to hit the downstrokes. There's a bit of a reclaim there. I hate it when this thing happens. There it goes. So boom, huge puke. Notice how fast ES goes down. So as NVIDIA popped up a little bit right there, and ES didn't budge. So it's willing to downstroke with it. Let me actually boost the quality of this. Boom, they're dumping at exactly the same rate, same pacing. Let's look at the whole trade again. Go for it. Hard stall right there. Amazon's near the top of this little range, the bigger range and the smaller range. So there's a smaller range and a bigger range. So could mean revert. Microsoft really not telling us much. Boom, big dump. Again, you know, there's been flashes of larger limits. We're kind of seeing them not as aggressively as I'm getting into this, but before this, they were there. Looking for that 64. Overdump. Now you got Microsoft getting drug with them. Amazon near the bottom of the range. This fucker's just puking and stop running a bunch of shit. So we scale a little bit at 67, and then we're getting out at a little bit at 66.50, and then we take it all at 66.50. Could have held it to 64.50s, but the momentum's running out. That's such a big move. It could come back. And then there's the final trade right there, 2,300 on it. So you're looking at 28.33 ticks on the trade on 3 attempts. So what does that look like overall? Well, let's take a look at, again, ES here. Again, 28, almost, yeah, 28.3 ticks. So if we put on this fib tool, it's a modified fib tool. This is where we were originally trading here. So right in that region. So, you know, it's beyond the point of control of the, well, actually, was it beyond or was it at the point of control? Let's pull this back because this is, you know, where it would have been at the time. So, you know, we got more than the point of control worth of move. Obviously, it overblew and we could have held it, but what you got to understand is a lot of the trading was happening in this first touch. It failed, came back, re-engaged it. It failed and it came back, re-engaged it. Yes, it kept going, but between this first test and it coming back, that little chunk works for us. And then taking it again, it comes back. Those two trades alone stack up, and when you scalp those chunks, it equals the entire move. I mean, I could have sat there and tried to hold it, and it could have just blown against me, but instead, because that could have happened, instead I scalped chunks of it, and it equaled the move I was looking for anyways. So there's a lot of times I go for the trade, and it just fails. But if I scalp the chunks, it could equal the target. There could be times where it doesn't go against me, but I scalp chunks and then it equals what that target is, but that target never actually happens. Sure, in this circumstance, it overblew the target, but it never went to value area low, which is what a lot of people would be attempting to do. But that was a really good trading session. going at it 3 times and scalping it. And scalping is so imperative and important, and you're just never going to see anything like that again. I'm probably never going to trade anything quite like that again, but it just made total sense each attempt for me. And it's really hard to convey because there's a feeling inside of me. There's something inside of me that just knows what that is through years of experience and years of seeing shit like that. That I can never put this level of confidence in you. I can never put this level of experience inside of you. You just have to see it for yourself multiple times, fucking it up or missing it before you actually can make it work. Yeah, I could have squeezed it, and I would have probably squeezed it if VIX was a bit higher, but VIX is so low that a lot of the times the motherfuckers come back. A lot of the times the fucking trades come back. They did come back the first 2 times. And it could have failed the 3rd time. That 3rd trade could have failed, but since I took the first 2 scalps, they're going to pay for a potential loss on the other side. And then I'm okay. So I'm kind of thinking like that, if that makes sense. Whereas some of you might be thinking it differently. I'm trying to figure out how am I going to balance out my fucking bankroll in the end. Which... there is a video on bankroll management. Anyways, guys, I hope you enjoyed that video, and I will see you in the next one.